and welcome to yet another episode on our channel Talk of Town. We are here in our weekly series, The Market Wrap. I have the usual suspects, Mr. Ashwin Kumar from DA Capital and Mr. Prabhanjan Rao from Elysian Advisory, a SEBI registered investment advisor. Good morning to you both of you.
Hi Lakshmi, hi Prabhanjan.
Hi, Ellen. Hi, Ashwin. A
After
warm,
after
rather
a
very. Sorry.
after a lot of you know silent weeks, if we can call it that way, a good action packed week recently concluded.
Absolutely,
I'm
absolutely.
eager and curious to know both your inputs today, both in terms of the global markets as well as Indian markets. Prabhandhan, you had something to say.
No, no. I was just saying to everyone who was tuned in, a warm rather than hot salam from Dubai, sunny Dubai.
Okay.
Sorry. Am I audible? Am I audible?
Yes, you
Yeah,
are.
yeah.
Okay, okay. Please go ahead, Ellen.
Yeah, so I think just to kind of brief the viewers, Uh, this time around, a slight twist in the tail. The US markets were down more than what Indian markets were. And Indian markets also, I wouldn't say down in a big way, but compared to the previous 2 3 weeks, I think we were down almost close to a percent. But US markets, we did see a sizable correction, if I can call it that way. So over to you, Prabhanjanji, for all the global factors from the fundamental point of view.
Great. Thanks, Ellen. As usual, let me just touch upon the main parameters as I always do during the week. Uh, the crude is again hovering around 70, not much, has increased from the previous, the levels. Then dollar index was touching 100 last week, and then now it came down a bit to 98.7, but nothing, no major impact on that. However, rupee weakened to a 1 month low of
Yeah.
87.54. And when this is what happens when the dollar index goes beyond 100, then the rupee further weakens, and my sense is if that happens, then rupee might get to 88 or 89 levels very soon. So the CBOE weeks is 20.38, and last week is 15.14. Sudden big jump in the CBOE weeks. India weeks is again in the same lines of around 12. Gold climbed as a safe haven. It inched up a bit, and it's about 3,362 per ounce. And Bitcoin, it's getting softer. It's about $114,000. So these are the parameters. And yeah, and you are very right in saying that U.S. markets have been very choppy. The S&P 500 dropped roughly about 2.4%. The Dow Jones declined about 2.9%, and the Nasdaq Composite fell around 2.2%. Marking this as a worst week for some indices since the tariff-driven sell-off in which started in April. And not to forget, these small cap stocks represented by Russell 2000 experienced the sharper losses. I mean, they are down almost 4.1 to 4.2%, while the S&P mid cap 400 shed about 3.5%. What caused these things? I mean, we all know about it. One is the US Fed decision, a pause with a hawkish tilt. Fed rates kept unchanged at 4.25 to 4.5%, but Powell signaled one final rate hike if inflation persists. Quite unusual. But the US core PC rose to 2.7% year on year, but about less than a 3% target. Moving on to this Fed decision, these things keep continuing. But the main thing, what has happened is on the US tariffs euphoria. Our man comes every day here and there out of the moon and then keeps talking, which makes the markets very volatile. And these days, we are all used to the markets are used to his tantrums. But still, there will be sudden short covering, sudden sell offs. So, let me just give a brief about the developments that has happened during this, week. The US EU trade deal, a 15% tariff now applies to most EU exports to the US. And this avoided a 30% tariff scenario, but the 50% duties on the commodity sector, like steel and aluminum, still remain. The deal includes a 600 billion investment commit from the EU. So I'm not sure whether it's a deal or it's just a one-sided thing from US. What is its impact on India? It's positive for the global EV sentiment. It could lift tier two Indian auto ancillaries and component exporters, because a lot of Indian auto ancillaries export to US. So this could be a big boost. This deal could be a big boost for them. And this US Japan mini trade deal, of course, it happened the previous week. But what is its impact on India? With Japan tighter to the US, India may face steeper FDI competition in semiconductors, in AI funding. So I see a little bit of a compression in the AI funding from the PE and the VC side. However, a more stable East Africa trade corridor benefits Indian exporters in a long term. Last but not the least, what else we can say about the imposing tariffs on Indian exports? This Trump's tantrums, has given 25% tariffs on Indian goods effective August 1st. It targets many more labor intensive sectors like textiles, pharmaceuticals, gems, auto components, engineering goods, so and so and so forth. But till today, we don't know. We are not. We don't know what sector of the goods come under this ambit. We need to wait and watch. The thing is, Washington is very unhappy with India's continued oil and defense dealings with Moscow. This tariff isn't merely about daily access to trade imbalances. It's a strategic nudge to choose sides. So India need to be very cautious and then see how we can do this Atmanirbhar in the next 2 years. And I always feel next 2 years is very very crucial for us. We need to follow the China path at the end of the day. You need the China at the end of the day. Every US guy household has Chinese products, but tell me how many Chinese guys has US products? No. So they strictly follow this Atmanirbhar, and I think Indian government, Indian entrepreneurs, and many Indian companies should really take this as a challenge. And in the next 2 years, we need to build up things which are like Indian made. So I think these are the domestic driven sectors will really will we need to keep an eye on this, and that's what will make the market direction in the coming weeks.
Very well said. Very well said. In fact, most of these major events, kind of, we normally say, before this and after this, right? So pre-independence, post-independence, pre-COVID, post-COVID. So even the saying is going to get changed, right? It is always we always say necessity is the mother of invention. I think going forward,
Right.
tariff is going to be the mother of all inventions, right? On a lighter note, Ashwin, coming to you, how are the technicals looking on a global standpoint?
I'm glad that the S&P is given up this week. It eventually had to. It was just getting stretched too far, and I'm glad it did. And a 2% plus correction is indeed. Now, what is happening is during this process is the stocks that did not rally have been beaten down. So, like we spoke last time, somebody else has to come and take the load. But if it is not, now what is happening is it's more of becoming. It's not just the tech stocks that have fallen; it's a broad market sell-off. So the guys who did not participate in the uptick are also getting beaten down. So that's a bad sign. Nevertheless, it's not a major reversal that I'm seeing right now. But the sell-off, because the uptick got overstretched, the sell-offs are usually sharp, and the recoveries also will be very very sharp. So no major concerns. I think the selling pressure will continue with a small recovery during the week, but the selling intensity is going to be there in the S&P 500. Gold, of course, ended up by about 0.8% positive for the week. I mean, most of it came during yesterday's session. Silver kind of surprisingly gave up during the week in excess of 2.5%, and the crude has been kind of positive. So I wouldn't sound any alarm for the next 1 week of trading session. I think things are going to be maintained as is. Silver was a little bit of a surprise for me, but once again, inevitability was there for a correction because these commodities have rallied way beyond what one could have imagined. But nevertheless, these corrections are something that I would be strongly looking to buy into these probably silver or gold, rather than worrying too much about the interim corrections, because these are a part of market cycles, and I honestly welcome it.
Okay, interesting. Yeah. Again, moving on to our Indian markets, a few interesting, trading sessions over the last 4 5 days. A few again interesting bets which gave up during the week. Before I get into specific stocks, I'll allow Mr. Prabhanjan to go ahead on the fundamentals as far as India is concerned.
So during this week, I mean, one major thing that what is driving our markets is, like, this is trade deals. It could be between India, UK, or it could be India, US, or US, EU. Because somewhere or the other, we are not insulated. We are not insulated. We keep deriving directions from those things. To just talk about India-US free trade agreement, it fueled optimism in the export-linked sectors. Textiles rallied during the previous week, and select auto consumer names gained. But as soon as, like, India-US trade negotiations remain unresolved, these things again taken backseat, because these export-driven things again get a backlash of 25%. So I mean, with the next 2 months or so, until these trade negotiations settle down, these are the undercurrents where it will have a direction on the markets. It will drive the direction for the markets. The second is on the earnings. This quarter, we had a mixed earnings, mixed bag earnings. Financials and IT sectors underperformed due to weak early earnings. And to name a few, like an Axis Bank posted a surprise decline, I mean, which we never expected, and the peers like ICICI, HDFC posted a decent set of numbers. Foreign institutional investors increased, bearish derivatives positions to a 5-month high, uh, reflecting a heightened caution and amid tariffs uncertainty and rich valuations. And one thing, Ellen, what concerns me is, the dollar moving, beyond 100, and what it means for the Indian market. And we need to be very cognizant and cautious about this. A rising dollar usually triggers capital outflows from emerging markets, including India. Foreign investors often pull out money when the dollar strengthens, chasing safer returns and higher US yields. And we see the US yields are always, like, they are inching higher. They are not softening anymore. This creates a selling pressure, that can lead to increased volatility and downward pressure on Indian equities, especially in sectors which are dependent on imports like metals, oil refining, and airlines. However, these exporters might see a silver lining, but it is again, the dollar revenues convert into more rupees. But the problem is the export tariffs and the tantrums from US will wither this down, and the global demand issues, and the benefit is very limited. On one side, you see a hike, and on the other side, that hike is taken off. These are the macro and the global economic factors are weighing the Indian markets, and this drives the direction. Fundamentals being intact, but as I said in my earlier stance, like, the next 2 years is going to be crucial for the Indian domestic sector, where it has to strictly follow this Atmanirbhar, and then follow the Chinese way. That's the only way where we can see moving from number 4 to number 3 and positions.
Rightly said, sir. Rightly said. Ashwin, how are the technicals looking as far as the Indian markets is concerned?
Just let me share the screen. Bank Nifty. So the selling pressure continues, not as intensely as Nifty, but the selling pressure does continue, and I'm expecting, uh, the Bank Nifty to come and take a minor pause here. So it is at this level we'll be able to see what kind of options data inflow is there, and that's when we'll be able to place our bets accordingly. But for now, I believe for the next 1 week that the selling pressure is definitely going to continue in Bank Nifty. Of course, you will have those short-term or interim recoveries during the week, but that's a part and nature of the market. But eventually, I think the market is rather Bank Nifty is going to take support at around 55,165 levels. If that is breached, it's always a word of caution that I want to put across. If that is breached, So then we have the next strong support about 1500 to 1700 points away. So that's a major drop. So, but for now, at least for the next 1 week's perspective, let's hope that the market takes, Bank Nifty takes a support at about 55,165 and show some sign of recovery coupled with volumes. And that's when I will be glad to take any, action on the long side in Bank Nifty. Coming to Nifty, we spoke about it very specifically last week in terms of the options data. Uh, 25,000 on the upside was a major resistance. The market could not breach it during the week, and 24,500 was on the downside. So the market did not breach that level either. So it was almost range bound, but predominantly negative for the week. And every time the market, the call option selling data was so strong, Lakshmi, that during the course of the week, market did try to move back about 25,000, but eventually it gave up. And on the downside, 24,500 was also a strong support in terms of put option volume. Rather, sell put options sold. So there was a lot of put option contracts that were sold, which kind of meant that the market will find support there. So the prediction for the last week came out as accurate as possible, I could have imagined, and I'm glad it did. And for the if you am looking at next week, then once again 25,000 is a major resistance. So you see the intensity in call selling that we have about at 25,000. So that becomes a very big landmark to be breached if at all we are wanting to turn long in Nifty. Now, what is also interesting is because of the selling pressure that we saw last week, 24,800 has also kind of picked up steam in terms of call option selling, and so has 24,700. So you have almost like a step ladder method. So each of these levels not only have to be breached, but on a closing basis for us to see any major uptick in the market for the next 1 week to 10 trading sessions. On the downside, again, you have 24,000 and 24,200 as the major supports for the next 1 week to 10 trading sessions. And these are the levels that I'll be looking for. So in conclusion, neutral to marginally negative is what we are anticipating the market to close or trade between this range for the next 1 week to 10 trading sessions, Lakshmi.
Interesting. So, I mean, people who are placing their bets on a weekly basis, this could be useful to them. I mean, fear and greed are two emotions which drive the market. So, the big question is it time to be greedy? So, your thoughts, Pravanjanji?
Absolutely not. This is the time to be a little cautious. But
Okay.
as a long-term fundamental investor, uh, choose the fundamental stocks. If there is any rebalancing that is required, yes, we need to do a rebalancing. Now, what is going to happen? I'm not saying that we need to rush and do a rebalancing. We need to wait for the in the US tariffs and how it flares down, and then see. Because 10% or 25%, 15% increase in the tariffs will crush the business models. Me being a CFO in other companies, we have built companies in markets where basing on the tariffs, the tariff advantages and incentives given by the government. So I always believe that these tariffs are a make or break decision makers. So we need to closely watch and then see invest in those sectors, in those sector leaders where there is a steady and stability in the growth. So I would say stay cautious for next 1 or 2 months till we get the clarity. Then
Okay.
if required balancing, rebalance needs to be done to the portfolios. We need to do it, and then stay focused in long term investing.
Okay. Ashwin, same question to you. Is it time to be greedy?
Lakshmi, there are two parts to it. One, I've always, I've strongly believed that options data is a very, good indicator of the market sentiment, especially if you are a short-term trader or an intraday trader. And now that we are discussing the entire scenario for 1 week, the options data do not motivate me or give me a good impression that I have to be aggressively long in the market. On the other side, as an investor, I also like to believe that it is good to average when the markets are coming down, but it has to be done with a lot of caution. It doesn't just mean that the market is down 2%, let me go and buy something today. There has to be a very cautious and conscious approach, and there has to be a logical system in place. So at this point in time, Both the boxes do not check for me, so I am not going to be a net buyer during my next 1 week of trading session, unless, like Prabhajan said, some stock really, there is always a stock which is going to outperform the market. There's always a sector which will outperform the market. It's not that everything is going to be on a sell mode. It is going to become a stock pickers market, and whatever looks very you know attractive to me has to go through that additional filter, because the overall market breadth is negative. But I'll not be a net buyer for the next 1 week, that's for sure.
Got it. Before we wind up, one more question to Prabhajanji. So, the lot of investors who entered the market over the last couple of years suddenly in a place where they're confused what has to be done, because they've only seen a broad market rally. They've come in with an expectation of 25-30% return from the Indian markets, but now reality is slowly sinking in. So what is your advice to these, I would say, first time investors into the market? How should they place their investments in the Indian equity market?
Great. I mean, in fact, a very good question you have asked, and a lot of people keep asking me, and even a lot of my clients are also, they keep on in touch with me. See, one thing I always say is, Ellen, is like, we need to see this stock market investing as a business model, not less than 5 years. So it is a business model, and every business will have ups and downs. So I have seen many commodity business during my CFO careers, commodity business, FMCG business. So you will have 1 or 2 years which are like which sees a slowdown. It doesn't mean that you close down the business and then go. No, so you will
Yeah.
reap the benefits in the third year. So similarly, we all need to understand that stock market returns are not and never linear. They are not fixed deposits. Stock markets is not for faint-hearted people. So we need to understand these things. We need to improve our investor behaviors. And if we purchase a real estate, do we check the real estate on a daily basis? No, we don't. We just leave it at it. So just because the prices are not available, here the prices are available on a say, on a hourly basis, so we tend to see irrespective of how much we have invested. So we need to be I mean, treat this investment, I mean equity investment, just like a real estate. You invested, give the time to grow. Take this as a business model for not less than 10 years. The business cycles comes and goes. You might lose 30-40% in the first year or second year, but you will gain 60-70% in the third year or fourth year if the business model is right, if the management is right. So think this as a business model. See for 5 years, go for long term investing, and that is where big money lies in.
Very well said, sir. Very well said.
And I have two inputs here, if I may, Lakshmi.
Yes,
One
yes.
is, the moment we understand that we cannot ever time the market, is we have done, ourselves a good, we have put ourselves in a good position. So, the best time to buy is when you have money,
Yeah,
and the best time to redeem is when you need money.
correct.
So that's one fact. If we are able to acknowledge and accept the reality, that is one. Second is, I'll take a cue from one of the short videos that I did recently. Is whenever I'm getting into an investment, the easiest, if I have to go from point A to point B, the first thing we naturally all do is check our navigation system to just get an idea of how long it's going to take to reach there, so that we get our expectations very realistic. In the same way, whenever you're getting into an investment, I mean, it need not necessarily be a equity market. It could be any investment. If you have a track of the historical return, preferably over a period of 5 to 10 years, and you're able to check that, that's when you end up setting a realistic expectation for yourself, and not you know think, like you always say, 34,000 feet above sea level.
Yeah.
You will have your real expectations very much on the ground, and that makes your survival chances very high in the market. And of course, after survival comes the money making part. So these are the two important points, if you ask me, has to be highlighted to the new age investors as well.
Excellent, excellent. So if I can summarize this entire discussion in this way, so investing is like a test match, right? So over 5 days into 3 sessions, there are 15 sessions. If you're able to at least win 9, 10 out of these 15 sessions, I think we have done ourselves a good thing. So look at
Absolutely.
investing. like a test match. Try to win as many sessions as possible, and do not look at it from a T20 angle. Yes, Prabhananji.
Yeah, sorry if I can say this. What you said is very right. And a lot of investors also see that if you build a portfolio of, say, for example, 10 stocks, not it does not mean that every stock should perform, right? So on the whole, if your portfolio is performing, number one, and number two, if you need to also compare your portfolio performance with how the indexes are behaving, how the broader market is behaving. So if your portfolio is behaving is has fallen less than the entire market, but that means you have achieved something, right? Your
Yeah.
portfolio is very resilient. So the investors also should keep thinking about it, and they should not always think that every stock in the portfolio should outperform, and the portfolio should always give positive returns. No. So these two, we need to, I mean, as an investor, we need to get accustomed to these two and stay invested for long term.
Right. I mean,
Yep.
again, a correlation. If there are six batsmen and five bowlers, all six batsmen cannot score a century in the same innings.
Absolutely.
So there'll be one or two
Absolutely.
people who will give us that kind of a push. Similarly, in your portfolio, there will be a couple of stocks which will give you that, above average return that will make up for the others. So,
Right.
I mean, I think excellent
I think
discussion
you're
as
following
always.
the ball to ball progress of the India England match, Lakshmi. So that's why so many correlations.
Very true. Very true. So, as usual, excellent discussion. Look forward to the next episode. We'll be back soon in a week's time. Until then, take care.
Absolutely.
Have a super Elysian day.
You too, man.